You know what happened? Coinbase just announced a full system maintenance in October 25. The link to coinbase.com, to the source, is within my comments. I will share a screen of that as well. Please look at the screen. What they said, basically, that trading, withdrawals, card staking, all will pause for 5 hours.
All paused.
On that date. That's huge. Come on. Coinbase, USDC, and even BlackRock somehow are linked. I will go into details in a second. Disclaimer here. This is only my personal view, not financial advice. This is only what I see while connecting the dots together. Now, what is USDC and the historical link? USDC is a dollar-backed stablecoin, issued and maintained by Circle, the company. Originally, USDC was governed by a joint venture called Center, a co-founder by Coinbase in the past, and Circle in 2016. In August 2023, they dissolved Center, and Circle assumed full control over the issuance and governance of the USDC stablecoin, right? Now, the equity and revenue sharing ties, but even after that shift, Coinbase holds an equity stake in Circle. Coinbase holds an equity share in Circle.
Coinbase holds an equity share in Circle.
Come on. A stock exchange holds an equity share in a stablecoin. More importantly, in Circle's IPO filing, it's disclosed that Coinbase receives 50% of the residual payment base. What that means? Income from the reserve asset backed by USDC. From USDC held on Coinbase platform. So if someone holds USDC, they receive a share profit. Let that sink in. The more USDC people hold on Coinbase, the more Coinbase shares into profits from those backings, from those reserves. So it aligns incentives for both of these companies. Now, what that would mean, in my personal opinion, of course, what that would mean strategically for Coinbase. Coinbase is not just neutral exchange for USDC. It is not. It is materially tied to stablecoin revenue flows. Any disruption or reconfiguration of Coinbase infrastructure could ripple into Circle's reserve income or how USDC is distributed. They actually control that in these mechanisms of a share profit company. Now, because of this, in my opinion, major maintenance or system shift are not just technical anymore. They could disrupt income flows, custody paths, and trust as well. Now, Coinbase and BlackRock, also Aladdin, which serves as an AI BlackRock's fund. Once again, only my opinion. I can be wrong, I can be mistaken. But what is Aladdin? Why it matters for BlackRock and Coinbase as well. Now, Aladdin is BlackRock's flagship investment from the past. Portfolio management and risk platform used by huge institutional clients using BlackRock's fund to custody their services, to custody their investment products. Now, in August 2022, Coinbase announced that Coinbase Prime, its institutional trading and custody division, would integrate with Aladdin as well. BlackRock institutional clients could access in that way crypto, beginning with Bitcoin and Ethereum via Coinbase infrastructure, because the link with Aladdin. What that means? For me, that means that big money managers already using Aladdin can plug in Coinbase for trading, custody, reporting.
For trading, custody, and reporting.
Implications, only my view. That opens a liquidity bridge between traditional finance and cryptocurrencies, isn't it? So institutional capital via BlackRock and its network, of course, now flows in and through Coinbase rails. To maintain that, Coinbase must ensure its back office custody, compliance, audit trials, risk systems, settlement and reporting all meet institutional banking grade expectations. They must all meet these requirements. And a maintenance as sweeping as the October 25 may well be, only my opinion, may be about re-architecting those rails.
Re-architecting those rails.
So, they scale, tighten risk, and align with Aladdin institutional standard. Why this matters, why this all connects to October 25, and what may happen, only my opinion. I'm not forecasting, I'm not financially advisor. I will do what is best for me. You can do whatever you want for yourself. This is only pure speculation, only my opinion. When I will put all this together, Coinbase is deeply financially entangled with Circle, USDC, as I mentioned in the beginning of the movie, especially via revenue sharing and equity. Coinbase also anchors institutional access via Aladdin, BlackRock, mentioned before, making it a key node between traditional capital, traditional one, and crypto capital. Crypto, traditional and crypto link together. October 25, full freeze for this couple of hours of Coinbase isn't likely a minor patch, because it never happened before for Coinbase and any other crypto exchange. My view on that, to be honest with you, it's a reconfiguration of custody, risk, ledger, revenue, path, and settlement rails.
Settlement rails.
To better serve both stablecoins income flows and institutional demand as well. In other words, this is plumbing befitting a financial institution, not just a tech update, in my belief. Use this lens to question what they don't announce, to watch what happened after they go back online. If they rewrite internal flows or revenue path, they could shift the power into crypto's backbone. Stay sharp.